Okay, well, it has been another record-setting week for stocks. Even in the face of trade and interest rate uncertainty, investors have been in a bullish mood. Skyler Weinand is Chief Investment Officer at Regan Capital and joins us here often on BNN Bloomberg. Nice to have you with us, sir. And I guess, like at the end of the day, everybody just wants to know, what should I do at this point? What's your vantage point on what one should do after a record run for stocks?
Stay on the train.
Okay.
Consumer and corporate balance sheets are healthier today than they've ever been in history. We're at all-time highs in the stock market, but we're also at all-time highs on U.S. home prices and U.S. home equity. So consumers have a great-looking balance sheet to continue to spend. We see the news on tariffs that companies are absorbing the tariffs thus far, but I would be paying attention to names that have pricing power and will be raising prices here to keep margins over the next couple of quarters.
I don't want to get too economically wonky here, but and I want to know the kinds of companies that would fit into that description. But if companies do have pricing power, what does that mean in terms of the inflation story? Because there is still a chorus of people, including the President of the United States, who would like to see lower interest rates. There are some people that say, hey, you get lower interest rates, especially in the United States. Maybe that helps people with things like mortgages, the same way we're talking about that in Canada all the time. But if companies are putting a little bit of pricing pressure onto their consumers, is there an inflationary consideration there?
And that's the bad news. And we've yet to see that will start to come this fall. Many companies out there, that lead time between when they order and when they get the goods is upwards of about 6 months, right? So if they put in those orders in, let's say, March, April, May, we're not going to see that. We're not going to see the end user have to pay those prices until October, November, December. So that's what the Fed is nervous about. That's why they're keeping rates high. And in my opinion, they should actually raise interest rates because the economy is doing so well and we have inflation coming down the pipe. And inflation is a regressive tax. It's going to hurt Main Street. Right now, tariffs are a tax on businesses, but it will eventually be a tax on the consumer. And that's the problem. That's why the Fed should potentially raise interest rates this fall.
Interesting. But if I'm trying to sort of put all the pieces of your thesis together, like even with that tariff on businesses, we're talking about more than 80% of the companies in the S&P beating profit expectations in the quarter. So tough to deal with, but they are dealing with it. I guess the next part becomes, how does the consumer deal with it and how does the market respond? But for now, maybe don't overcomplicate that story. Just stay invested, basically.
Yeah, close your eyes for the next, 3 months. And again, in aggregate, consumer balance sheets are cleaner and better than they've ever been, as are corporations. But it's a tale of two cities. It's bifurcated. And Main Street, middle America, lower level consumers that don't potentially own a house and aren't invested in the stock market, they are hurting, and it is only going to get worse. So in aggregate, the economy is going to do great. The stock market's going to continue to move along like a train because these companies, they're already figuring it out. They're laying off employees. We just talked about, Intel looking at cost cutting.
Yeah.
They kind of realize that, hey, in order to maintain margins, we're A, going to need to cost cut, and B, potentially need to raise prices. And so it is going to be a regressive tax, and the market won't really think about it or do anything about it until it sees it. And we will start to see that in the next few months, as early as, call it, September.
Okay, and then just on that subject of companies with pricing power, is there like a particular industry that shows strength there, or that's just, you're looking for well-known brands that are good executors, that kind of thing?
Yeah, I think it's kind of a pairs trade where it's I want to own Walmart versus, let's say, Target. Okay, I feel like Walmart is already running such thin margins and has such an ability to dominate their suppliers in terms of pricing but they are slowly already starting to raise prices, okay? Then if you think about retailers like a Nordstrom or a Macy's versus a discount retailer like a Ross Stores or a TJ Maxx, those discount retailers are utilizing that alternative where either A, the lower end consumer, which has to do back to school shopping here in the next few months, they're going to go to Walmart and TJ Maxx versus Kohl's or Nordstrom or Macy's. And then you have the higher end consumer that's actually going to trade down, okay? And so big, large companies like Walmart and look at it like a pairs trade, and then a discount retailer like a TJ Maxx or a Ross Stores versus mainstream retailers that you might see in a mall.
Okay, and
go
then,
to the strip mall, not the mall.
Right. I gotcha. Yeah. That's really helpful context. Before I let you go, you had told our production team one investment idea you have is Madison Square Garden. You know, it's interesting here in Canada, we just talked about how Rogers Communications consolidated a lot of sports assets. Be interesting to see what happens with that part of their business in terms of maybe they spin it out at some point, nothing on the agenda. But this is a pure play in a lot of ways on, you know, the business of professional sports, I assume. What is it about the business that caught your eye?
Yeah, they've done a great job of stripping out those assets, their television, the actual building, all of those assets have been stripped out, and now it's just the teams. So you have the New York Knicks and the New York Rangers, okay? The LA Lakers just traded for $10 billion. I'd put the Rangers estimate at about $3 billion. So you have $13 billion worth of sports teams that are trading inside of a $5 billion company. So when and if they actually transact and or Jimmy Dolan potentially leaves or wants to extract a tremendous amount of value, you're looking at a 2.5, 3xer based on current market values.